Refinancing. What is it and why is it so popular? With refinancing, you're able to get out of a sticky situation, consolidate debt. You can take out equity to pay for a major life event, to invest. Refinancing has built a lot of wealth for a lot of different people. Once I started doing them, I realized, wow, this is very powerful. I cannot believe how effective this is at achieving different financial goals. And so I thought, okay, let me talk to everyone about refinancing, what it looks like, who it's for, and who it isn't for. My name is Isco, mortgage broker here in Ottawa, but we service the entire country. I'm going to explain that to you right now. So what is a refinance? A refinance is a new mortgage that you're securing on a property that you already own so that you can tap into your equity for various different reasons. So when you're refinancing, you cannot exceed 80% loan to value. So if your house is worth $1 million, your mortgage cannot be higher than $800,000. Now, if you are doing a refinance before your renewal date or before your maturity date on your existing property or your existing mortgage, you will have to pay a penalty to break your existing mortgage. But if you're refinancing on your maturity date, then you don't have to pay that penalty to your existing lender because you're doing it on maturity. Should I refinance now or should I do it later? Well, it really depends on your situation, your financial situation, and some of your goals. So if you're paying 29% on credit cards and 35% on Fairstones and high interest debt, there's a lot of different reasons why you need to refinance. It's best to speak to a mortgage professional to get a full consultation and breakdown so that you can see if it's worth it for you to refinance now or if it's worth it for you to just wait for your maturity date to do exactly that. So now I'm going to show you what a refinance looks like. So this is just going to be a basic refinance breakdown, assuming you're going to be with an A lender. But of course, if you're with a B lender or a private lender, these will look a little bit differently, but they will function in the same exact way. And for more information on what is the difference between an A lender, B lender, and private lender, and what are the fees associated with each, click on my video here so that you can go ahead and review that difference. So this is a real finance that we actually did. Client had some debt, was finding it very difficult to manage monthly. And also he needed about $40,000 in cash because he wanted to make a wheelchair accessible renovation. And so this was his situation. So he had a mortgage balance of $575,000. He had a car loan with Nissan for $24,000. He had a Scotia line of credit, unsecured line of credit for $19,000. Fairstone, this was a difficult one because it was a very high interest rate, but it was $14,000. And he had a student loan of $16,000. So all in all, he had about $648,000 in debt, including his mortgage. And this translated into a monthly mortgage, monthly obligation of $4,892. Okay. So when you refinance, you can consolidate all of those debts into your mortgage and take out some equity, assuming you do not exceed 80% loan to value. So we did a $690,000 mortgage for him, paid off all his debt. He got the $40,000 in cash that he needed. And now his total monthly obligations were $2,379. So that is a refinance. So monthly savings for him were $2,513. So more than $2,500 in monthly savings by refinancing. And he got to access the $40,000 in cash that he was looking for. Okay, so you can refinance with an A lender, a B lender, or private lender. They all offer refinancing. And who it's for is really somebody that needs to tap into the equity in their home to accomplish a financial goal. So let's say you're with an A lender. Maybe you've come up, you ran up some debt. You want to pay that off. It's a great thing to do is refinance, pay off all your debts, start fresh. Somebody that maybe wants a lower interest rate. Maybe they're at a higher interest rate now than what's available in the market, and they want to refinance to lower their monthly bill. Again, you have to do the math and see if it's worth breaking that mortgage early, but we can certainly help you do that. That's a good fit for refinancing. For being privates, it's very interesting because a refinance and a consolidation of debt results in the increase of your credit score. So if you're somebody with a 500 credit score, you have a lot of debt and a lot of unpaid collections and different things on your credit, and you pay all those things off at one shot with a refinance, you'll be surprised how fast your credit score increases. I'm talking, light speed. So you can be a B client today, you refinance, and in 6 months, you're an A client. So people that are in these situations, we often propose a 1 or 2 year term for them. So that way we can move them to an A lender once their credit score has increased because of the refinance. Who else is it for? Well, it could be for somebody that wants to take out equity to buy another property. Great, right? Maybe you want to, refinance your rental property because the interest that you pay on a rental is tax deductible. And then I would take those proceeds and put it on your owner occupied because that is not tax deductible. So now you're saving interest, right, on your primary residence, but you're also able to claim the interest expenses on your rental. Win-win situation, right? Maybe you're going through a divorce. You're one of the 55% of Canadians that are going to go through a divorce. Maybe you need to buy out your spouse, but you still want to keep the property. Refinance, spousal buyout, pay them off. Again, maybe it's an estate, right? Few siblings have, assumed the rights to a property. One of them wants to keep it. The others just want to be paid out. Well, that person can refinance and pay those two out, right? So refinancing can do a lot of different things, accomplish a lot of different financial goals. And it's a very powerful tool that Canadians have access to. What I will say is that you want to make sure you're working with an office that understands refinancing, understands penalty calculations, understands the nuances of it, when to do it, when not to do it, how to structure it, how to position it. So it's super important that you deal with an office that specializes in refinancing or that understands how refinancing works. So when should you not refinance? Look, if you're somebody that's refinanced many times and every single time is to consolidate debts, it's never to invest or pay for something, and you just keep tapping into your equity to pay out debt, you need to really revisit your financial situation and you really need to revisit your spending. Because you're going to be in debt forever. It's not, my experience is usually that, once people pay it off once, they usually keep it off because they never want to be back to that place again with all that debt. So if you're somebody that's constantly refinancing and tapping into that equity, eventually there's not going to be enough equity to tap into anything. And you're going to be stuck, with a mortgage for forever if you keep doing this. Then don't do it. Reassess your situation. But for everybody else that's like, you know what? I need to tap into this equity because I need to do X, Y, and Z. Great option for them. And that's all today for refinancing. If you have questions about whether you should refinance, please reach out to me and I'd be happy to go over that with you. And, there's a lot of different terminology. So renewals, refinancing, transfers, equity takeout, all of those things. I've put all of those terms into one video. I would highly recommend that you watch that so you get a better understanding of some of the terminology. But please click like, subscribe if you like these videos. Thank you.